Yes. The last thing I will be talking about, the last time we talked about things to play focus on while learning how to trade the foreign exchange market. And now we are going down to the basic of forex trading. Like I said earlier on, everything I'm going to be saying here is there for you on YouTube. I am only helping you channel your focus, your energy on on those things that really count in the foreign exchange market. And so the first step here is the basic of forex trading. The first thing here is what? Support and resistance. Support and resistance. Support and resistance. So many people call it supply and demand. They call it accumulation zone and distribution zone. But don't let this get you confused. Simple term for this is support and resistance, and we all know support is a level where price is a ground level, a floor level where price stop and you begin to do reverse back up or rally back up. While the resistance is a ceiling level where price will hit and began to fall back down. So what am I saying? Don't let any words like supply and demand, accumulation and distribution, and every other thing distract your attention or confuse you when learning how to trade. The main thing you need to understand is what? Support and resistance. And let those who choose supply and demand, accumulation and distribution zone, let them face it. But have it in the back of your mind that support and resistance is really important in terms of trading the foreign exchange market. And like I said, when price hits the floor level, this is this price coming down and hits the floor level, this happens to be a support. And when it goes back up and hits the ceiling level, this happens to be a resistance. And this is all what support and resistance is all about. And if you take a good look at the foreign exchange market, the market does what? It moves in waves. And these waves is being caused by what? Support and resistance zone. This wave is being caused by what? Support and resistance zone. So you need to understand the term and the topic support and resistance. You need to understand what support and resistance is to the market. You need to find a system, a way of getting and predicting and understanding what forex trading has to do with what? Support and resistance. Support and resistance is one of the core, let me not say the one of the core, is the core reason that make price turns either from upside to the downside. Support is the main reason, and you need to understand this because every action happens at support and resistance zone. Why do I say every action happens in support and resistance zone? I am only saying this because the whole level of the chart or the whole price levels, the price levels on the chart are all support and resistance zone. Price can reverse from anywhere, and as price is important to the market, support and resistance is also important because you need to find those key price, and that's why they are called sub levels. Those key price, that price does what? That price turns, make a U-turn. That price reverse from the upside to the downside or from the downside to the upside. So you need to understand what support and resistance is. And like I said, there are so many books out there you can download from. So many books out there you can download from. You can go through this site, books.org, and download any books you want to on the foreign exchange market, or you can go through forexwarriors.com. But what am I saying here? You need to understand what support and resistance is to the market. This is one of the basic things you need to understand. Lay more emphasis on what I said. In short, waste your time on support and resistance. Learn and understand this well. If this is the only thing you need to understand before the beginning of forex trading, then you move. Yes, the next is candlestick or price action. It is called price action because due to new traders, the incoming of new traders, some decided to learn what they call price action. But price action to me is just another name given to some candlestick terms. The only thing you need to do is research more on this candlestick. Now, support and resistance, like I said, we don't have much thing to do on support and resistance. But in candlestick pattern, we have over close to 30 candlestick patterns. We have close to 30. But what the simple thing I do is this. I master 20 of those out of 30, close to 30, like I said. I mastered 20 of them. I narrowed my focus to 20. And as I continue to learn and grow up in the foreign exchange market, I narrowed my focus to what? Just 5. In the sense that I only trade when I spot these 5 candles, because I want to understand, I want to flow with the market. And what I do is I only trade with what in respect to these 5 candlesticks that I make my personal research on. So what am I trying to say? Learn about candlestick pattern. You study about everything, the dodgy, the gravestone dodgy, the dragonfly dodgy, you know, everything on baby peas on YouTube. You learn and master them. You can chat me one-on-one and I will send you so many videos and e-books on candlestick pattern. But for now, you need to understand 20. When I mean understand, you need to know 20. When I mean 20, write them down 20 and know what their function is. Make a tabular form, write the candles here, then you write their functions, you know 20. But as you begin to grow in the market, you narrow your focus to just 5 or 10, depends on you. Like I said, I trade only 5 candlesticks time. And what am I saying? The critical and important candlestick pattern I'm going to write down here must be included in your 5, because they are very, very important. They cause major reversal and major retracement in the foreign exchange market. The first one is hammer. It is hammer in candlestick, and in price action, sometimes they call it what? Pinbar. It is called pinbar in price action. An hammer or a pinbar depends on you. You choose price action, you go with pinbar. You choose candlestick, you go with hammer. But what am I saying? You need to understand this, and they are all saying the same thing. This is it. They are all saying the same thing. Now, there are 2 styles of this. We have the pinbar and the normal inverted pinbar, the hammer and the hanging man, or the hammer and the shooting star. But what I do is this. Like I said, I want to narrow your focus. Everything are the same thing. This hammer from the downtrend and from the bullish trend, this is how it looks. So you need to understand this. And one critical aspect you need to understand is the wick. You see this week is very, very important in interpreting price action. The wick to me is very, very important in interpreting price action. You need to understand what evolved around this week. Because in baby pips, I am very, very sure you've gone through the strategy and the system composed in baby pips. And you've seen how sweet the hammer or this candle is, the pinbar is. But let me tell you, in real life trading, the market can form a bullish pinbar, a bearish pinbar, and instead of falling back down, it went back up. And the main aspect of the bullish pinbar is to what? Is to cause reversal. But like I said, not everything 100% is not everything is 100% in what? In baby pips. When you experience Forex in real life, you get to understand how things work better. So don't assume every bearish pinbar you see, or bearish hammer you see, or bearish hanging man, anyone, whatever you want to call it, you see is predicting an uptrend. No, price can still be what? Fall back down. In short, continue a very, very large trend. So what am I saying? You need to understand, make a core research on this topic. The bullish pinbar and the bearish pinbar, or the hammer and the hanging man. These are important. And this is the first candle I look when trading the foreign exchange market. Second one is the bullish engulfing or the bearish engulfing pattern. The engulfing bars. The engulfing bars. Like the name engulf, to do what? To cover up something. To cover up something. To engulf. We have the bearish and the bullish engulfing bars. The simple thing and the simple logic behind this bar is this. When you see an engulfing bar signifies what? A total reversal at that particular time. In the sense that, for example, when you see a bullish pattern, this is a bullish engulfing bar. In a downtrend, we have a downtrend and we have a bearish bar. Then we have a bullish candle. Now, this signifies what? At the end of this trading hour, the bull were in control. It does not really signify a new trend. No, it only tells you one thing, that the bullish are in control at this particular hour. They were more bullish traders than the bearish traders. And so you should be caution of your what? Of your trades. As time goes on, we are going to show you how I interpret these bars in my chart. But for now, you need to understand these two things. You need to understand it, how it works, and make a full research. And make a full research by yourself on how this affects the foreign exchange market. Now the next thing is what? The dodgy bars. The dodgy bars. Sorry, this is the bullish engulfing bar, and we have it for the bearish. This is it. We have a bullish candle for up. We have a bullish candle. We have an uptrend, sorry, and we have a bullish candle. Then we have a bearish candle. Now there's a reason I said what? You should understand the wick. This is an engulfing bar. At this particular hour, the sellers were more active in trading in this trading hour than the bullish the bull traders. Sorry. And so you need to understand. That's why I said you need to understand the activities of the wick. But if I want to interpret this again, I can see it this way. In a more baby step. Yes, this is it. So what am I saying? This is a bullish bar, this is a bullish engulfing bar, and this is a bearish engulfing bar. As you can see, a bearish engulfing bar. It signifies what? A downtrend. But to me, I don't really take it as what? A reversal. I take it as what? As a caution bar. It tells me that what? The bearish or the bullish are coming into the market. So I need to be cautious of my position if at all I am trading that particular pair where this bar pattern is formed. Now the next one is dodgy. Now what am I saying? The dodgy bar. If you look at this, the hammer talks about what? A reversal is coming on. Take note. The bullish engulfing bar say the same thing. But take note of this. The Pinbar and the engulfing bar can cause an immediate reversal. That is what they are known for. But not all the time. Not all the time. That's what I'm not trying to let you understand. They don't cause an immediate reversal all the time. Most times, they are just there to caution you of what? Of incoming buyers or incoming sellers. But the dodgy bar signifies an indecision. Indecision. There are no or less activities during that trading hour. The bullish and the bearish, the bullish traders and the bearish traders are what? They have not decided on which place to follow. Whether we need to have a breakout or a continuation. And that's why we have a dodgy bar. And dodgy can be like this. You can have dodgy this way. We can have dodgy this way. We can have dodgy this way. So we can have dodgy in different form, just like this. But when you see a dodgy bar, of course you know what it means. Now what am I saying? I am not trying to I'm not lecturing you on all about the trading and the price action bars. What I just want you to know is what? You need to understand these core bars very, very well, because they happen more in the foreign market. The other ones are the evening star, the 3 pattern bars, the morning star, the evening star, the morning star, evening star, and the morning star. You need to understand all this. I don't really trade these two because I believe the hammer or the engulfing will form in one of these patterns. And they don't form, like I said, when you understand how these price action bars forms, you'll be able to interpret them into your trading system. But for now, you need to understand the hammer, the engulfing bars, the dodgy bar, and of course the dark cloud cover. Dark cloud cover. The dark cloud cover comes in rare form, does not come in fully formed. But when it do comes, a reversal is sure to happen. You can go and check. When it do comes, a reversal is always gonna happen so quick or fast. So you need to understand this. The hammer, the engulfing, the dodgy, the evening, morning star, and the dark cloud cover. But you can keep all this, the evening and the morning star. And if you want to focus your left trading, you can just focus it to this 3 bar. You can make hammer your entry bar, or you can make the engulfing your entry bar. Anyhow you want it. But what I do is what? I make use of the hammer as my entry bar, because I don't call it hammer, I call it weakness, a weakness bar. So what am I saying? This is what you have to say in Forex, in babypips.com and in every other YouTube videos. But when you attend the class, we talk more on how you can understand the values of this week. You can understand what causes this short patterns, the how price react and make this thing to form. Because when you understand this fully, there's a difference between understanding it and having the knowledge. When you understand this fully, you will be able to understand what the market is doing. You're able to be in the same page and flow with the market. And so don't forget, these are the core aspects of price action to me. Hammer, Engulfing Bar, and the Dodgy Bar. These are what I mainly use when trading the foreign exchange market. We move to the next one of the basic of Forex trading, and which is what? The chart patterns. This chart patterns is a third basic of Forex trading, technical analysis. You need to understand chart patterns because the interpretation, support and resistance, and candlestick patterns causes what? Or candlestick bars. Let me use the word bars. Sorry. Candlestick bar causes what? Chart patterns because they repeat themselves. History repeats itself in the foreign exchange market. The only thing you need to do is what? Flow with the history, flow with the repetition. Now, this is chart pattern. You need to understand chart patterns. You need to Google more, check on YouTube. Like I said, you can private chat me or text me for some videos and e-books on all this topic. I'll be glad enough and happy enough to send them to you. Now, chart patterns. In chart patterns, we have the triangle patterns. So I'm very sure you've read all this on the baby pips. But what am I trying to say? Bio funds is here to help you channel your focus on the core aspect in forex trading market, and we try to treat important topics that have not been touched in the internet by the grace of God. But what am I saying? Yes, we try to treat important topics that have not been touched in the internet, that has to deal with forex trading. They have to deal with forex trading on YouTube. So always check our YouTube channel for updates every weekend on what next to learn in the foreign exchange market. Now the chart patterns, like we all know, we have the triangles. And the triangles, we have the descending triangle, the ascending triangle, and the symmetrical triangle. Don't forget, like I said, all this can be seen in what? In a book, e-book that we sent to you that is attached to this video. Japanese Candlestick by Thomas Bilowski. You can see or read all this in that same ebook. Or they are also in babypips.com. Or you can browse on other YouTube sites for all this. But what I'm just trying to let you know is you need to understand all this. The triangles. Now these are the chart patterns I trade. The triangles. Then followed by the head and shoulder patterns. The head and shoulder patterns. The head and shoulder patterns. I focus on what? Triangles, head and shoulder patterns, and what? There are two more I focus on, but let me first talk on all these two. The head and shoulder patterns and triangles. One unique thing about the chart pattern is this. I do tell people there is an inner pattern inside a chart pattern. Listen and listen again. There is an inner pattern inside a particular chart pattern, and that inner pattern is called by support and resistance. I'll make an example when I put all this together for you. I'll make an example of it. But for now, this is what I use: head and shoulders. And after head and shoulders, I make use of what? The double bottom, and double top. The head and shoulders, double bottom, double top, and lastly, flag. Now the flag, we have the bullish flag and the bearish flag. It all comes. But these are the main focus I focus on. I focus on what? The triangles, the head and shoulders, double bottom and double tops, and the flag. Most time we have triple tops and triple bottom, but when I see them, I assume it is double bottom. Because of what? Just one, 1, 2, 3. Triple bottom. But I just flip these two and focus on this. Triple bottom. I just leave these two and focus on. I leave this last one and focus on the two and just assume it's double bottom or double top. They are still the same thing. Now, all these patterns, most of them causes what? Reversal, and the other one causes what? Continuation. Like the triangles most time causes reversal, and at the same time they continue price spread. The head and shoulders, mostly they cause what? Reversal. The head and shoulder is what? They are for what? Reversal. The double bottom and the double tops are for what? Reversal. And the flag are for what? Continuation or reversal. Now, everything written in baby pips cannot be 100% in the foreign exchange market. Those newbies who are started trading live understand what I'm trying to say. I have a friend who started trading Forex with no live experience, and through baby pips was able to trade short patterns. But when he came back to me, he said the interpretations in baby pips is different from real life. I laughed, and yes, that is the main truth. When you trade Forex, hammer does not signify a full reversal at all times. Head and shoulder, they can be another inverted head and shoulder in head and shoulder. Because they are of two types. We have the inverted head and shoulder and the head and shoulder one. Let me make it like this. Inverted head and shoulder. Head and shoulder. Now when you go through Thomas Bulowski, you will be able to find more than 50, yes, more than 50 chart patterns in the book, in the PDF file, Encyclopedia of Chart Patterns by Thomas Bulowski. You're able to find more than 50 Adam and Eve head and shoulder, if Adam head and shoulder, if Adam head and shoulder, double bottom, double top, ascending top, descending low. So many chart patterns, even the square, the cup and flowers, the round bottom. So many chart patterns are in the book Encyclopedia of Chart Patterns. But what I said, in Forex trading, the noise is too much, and the only thing you need to do when starting is to try to filter the noise. When I mean filter the noise, choose what works best for you. Research on some little and join them together. It is not a must you are everywhere. Don't be everywhere in trading, because in trading there are more of noise than the more of the real thing. So what I do is what I focus on all this. See, when you understand Forex and you learn, keep on learning, there will be a time you'll be able to trade Forex using just these two, support and resistance and candlestick. Because the chart patterns, you'll be able to see them and view them with your eyes. And that's what we're going to do in our Forex class. We are going to train you and teach you to master these chart patterns merely by looking at them, instead of applying your trend lines and every other technical tools in spotting these chart patterns. You can also make use of support and resistance and trade the price, the market, and you make your possible returns. But before you get to this stage, and flag, these are what I make use of when trading the foreign exchange market. I don't focus on ascending triangle or no. I just want to see all this. When I see all this, then I know what next is happening. I know what next to do, and I know how to follow the market. Oh, that is my own personal system. You need to create your own system, and while creating your system, you need to focus on support and resistance, candlestick, and chart patterns. Don't forget, these three are the core basic of Forex trading. When you start, after learning all this for 6 months, and you just pick out and make your research for 2 months. Research is very, very important, because I do tell people the greatest answers to most questions in the foreign exchange market is your MetaTrader 4 platform. It is your MT4 platform that can answer most technical questions, not e-books of other people. Yes, you can also get their opinions. But what really matters in Forex trading is what you think of the market and not what others think of the market. Not listen again. What matters in the market is what you think of the market and not what others think of the market. For example, I can give you my Forex trading signal to trade on, and the moment I come out of a particular trade and I forgot to alert you, you are lost, because you don't know what next to do, whether to leave the trade or to continue with the trade, because it is not your idea, it is not your trade, it is my own trade. And so what am I saying? You need to trade the market all by yourself. And that is why we are here, build funds. We are here to channel your focus towards the core aspects that are important in foreign exchange market. And we are also to give you important videos that cannot be found on the internet. Important videos, a little topic that are being overlooked in the technical analysis aspects. In build funds, we trade technical and not just fundamental analysis. No, we focus more on the technical analysis. So these are the core aspects, the basic of Forex trading: the support and resistance, candlestick, and the chart patterns. Now, remember I said something. I said there are some inner chart patterns in the chart patterns. Now I'm going to put all these together. We are going to put them together to form a system, and you'll see what I'm trying to talk about. We're gonna put the support and resistance, the candlestick, and the chart patterns together, and you'll be able to understand what we are trying to talk about and how to go about learning the basic of forex trading market. Thank you. The final stage of our class for today, putting it all together. Yes, we want to put the basic together, the support and resistance, the candlestick bar, and the chart patterns together. Please take note of what I'm doing here. You need to pass through this stage. Most of us have different style of learning, but this is the stage, and this is how I do my own. This is how I learned the foreign exchange market. I picked a book, draw this line. This space here is my platform, MT4 platform. And what I'm going to do is what? I'm going to fix these three inside this box, marking out support and resistance levels, chart patterns, and candlestick levels. I'm going to input everything here together, and you see how best it can be a system. So what am I saying? Now we start from what? An uptrend. Price was going up. Here we start. Look at the hammer started the reversal from this point, and so it keeps on going up, went up, went back up. Then we have a bearish hammer. Then price kicked back, it went back up. Now, if you notice, I refuse to do what? Let price fall down here. This is not a real life, it's just a demo, something we are doing by our own self. Now, I did not make this bar here, I did not make it useful because of what? When you start trading real life experience, you understand that what? Most times when the pin bar or the hammer bar forms, price does not react to it. So now price was on an uptrend, then we have a full bearish bar here. We have a full bearish bar here. Then price came back down. Price came back down. Still there. Bearish bar. Then what? It went back up with immediate effect. Fall back down. Now, looking at this, we have a double top. As you can see, we have a double top here. And we also have what? A double bottom. Now, we've incorporated what? The chart patterns. Now, this is the support level. This can be any price zone. Now, this price is a core aspect in our platform, a core price level. And this is a double top. This is a double bottom. Now, the double bottom make price went up. The first leg of the double bottom took price up, then it brought price back down, forming another what? Level of support down here. Forms another level of support down here. Sorry, level of support down here. And look at it, price refused to close below this support. Now what happened? Price went back up. And breaks through the resistance zone. Now it breaks through the resistance zone. It keeps on going up, trending higher, higher. And what? Okay, let's do this way. I want to incorporate another chart patterns. I want to show you something. Now, okay, let me not clean this. Now it went back up, came back down, fall back down, then it rallied back up again, broke through this place, but came back down. Then we have another one, keeps on trending lower, but it went back up. And finally, it came down. Now looking from this place, we also was created an head and shoulder pattern. Sorry, an head and shoulder pattern. Now we know the double top or the double bottom rather causes the trend to move upward, and we now understand that head and shoulder is what the thing making what price to fall back down. Now a close below this support zone will give us a valid but bearish trend because the head and shoulder neckline has been broken. When you go through baby pills and you go through some videos, you are going to understand what is happening here. But now this is the head and shoulder, and we have a breakdown of this place. Now listen, another thing can happen here. Now we now have a flag. We might have a flag. A flag is always like this when you apply your trend line. You might have a flag. Now look at it, this is a bullish engulfing bar, and hammer. Then we have another hammer. Now, when I said there is an inner chart pattern in a chart pattern, I want you to make use of understand what is happening here. Now, this is a double bottom, this is an head and shoulder, and this is what? This is a flag formation. Now, when you look at this flag formation, we have a resistance. We have a support for this flag formation. And so what we have, you need to take note of this. This is a technical thing. So you need to take note of this support zone. Why am I saying you need to take note of this support zone? Because this support zone is now another zone, an intermediate zone that price must break through in order to come back down to this place. And that's what I mean by a chart pattern inside what? Another chart pattern. This is the head and shoulder pattern, and this is the flag. This is a flag. And this is a flag, but this is the support of the flag. Price need to break the support of this flag because now this head and shoulder is no longer valid. Yes, it is the higher time frames chart pattern, but this flag can cause another reversal back up. I don't know if that's what I'm saying. This flag can cause another reversal back up. If price refuses to break below this zone, then it can go back up and form another double bottom here, and go back to touch our resistance. So it is critical for you to understand. That's why I said whenever you study chart patterns, whenever you make your research on chart patterns, you try to understand and watch out for inner price patterns inside. You need to watch out for inner chart patterns. You need to watch out for inner chart patterns. Now when you look at this, now let's assume price fall back down and keep on trending. Now we have a close below this chart pattern. What we have now is our target. So what am I saying? We put them all together. We have our support and resistance zone. Yes, the support and resistance zone. We have our candlestick bar. We have the bullish bar, hammer, the Pinbar. We also have another engulfing bar here. Hammer, engulfing bar. We have another an engulfing bar here, bullish engulfing bar. And we have another bearish engulfing bar here. We have another hammer here. Then we have a Marubozu. When you get to trading, you understand we have a Marubozu. So we did not indicate a trending market, but let us, for example, let us fix a dodgy here. Now this is it. Let's assume the market started falling. It fell down. We want to fix a dodgy. Now market started forming dodges, a series of dodgy bars are coming down to predict what? Weakness of sellers. To predict what? Weakness of sellers. Then we have a bullish bar here, but price fall back down. Now these are dodges. Dodges. This is a what? A Pinbar, a bearish Pinbar, or a hammer or hanging man, anyone you want to call it. Now, when you look at all these things, this is how I started trading. But the only difference here is this was a book and not a board. So what am I saying? You need to learn to interpret what causes all this technical reversal. This is a what? The down cloud cover. You need to understand and interpret them well. A down cloud cover. You need to understand. Now, when you notice at this angle, price closes at this top. But what happened? I started my bar from here. It is only a news effect that can cause this. A news effect that can cause this overlap in trading, and it's called sometimes a gap. So what am I saying? Don't forget, I said there's an inner sharp pattern in a chart pattern. You need to understand that, like we have an head and shoulder pattern in the flag. But when you see an inner sharp pattern inside a chart pattern like this, a smaller chart pattern inside the higher time frame chart pattern, you need to what? Take note of the smaller time frames chart pattern support or resistance level before you think of the higher time frame. Because if price does not break through that place, it can take price back up to where it's coming from. So this is how it is. You can see we put them all together, the support and resistance, candlestick bar and the chart patterns. When you trade forex this way, when you trade forex in this manner, just focus your attention on this, learning all this. Then you know it before 6 months or 7 months, you're able to see what positive returns. It does not really matter if the returns are in cash or in cash or in returns, but in knowledge, in understanding the market, because you need to understand the market if you want to make maximum return from the market. So for now, this is what we've got. Don't forget, we need